Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. We're going to rip through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go. It's generally related to three different topics: wealth building, financial topics, and or commodities, because that's where the value is. So let's dive in there. Let's see what's going on with the markets, and I'll interject my opinions. You want to follow me at finding_finance and want to join our community, finding-value.com. That is where I dig deeper into potential companies and sectors that look good, and you can see how I'm playing this commodity bull market. We still have a coupon code, LEAP, going on. So coming on down, Dow gold equals 1. It says gold ounces required to purchase the median priced single family home in the United States. The number of ounces will at least half from here as the bear flag breaks down, which means that home prices are set to fall by 50% measured in gold. And that is your bear market that most people do not understand. It's going to be in gold, not in US dollars. This is your bear flag that he's got going on here that we've broken to the downside. The projected move is all the way down to basically the bottom here, where we bottom around, what did he say? It looks around to be a 80-ish. Yeah, about 80 ounces of gold is what I'm seeing on this chart here, roughly speaking, 80 something ounces. So that's probably where we're going to end up. You could buy a house for about 80 ounces of gold outright if this does play out the way that he is projecting here. So gold is definitely in favor, and we could see gold outperform a lot of different asset classes. HZ says jaw will close, gold will sell off the coming 12 to 18 months. So he thinks, in his opinion, that the U.S. 10-year real rate doing this is going to close the jaw and gold's going to fall down there. What I would say is that he's probably looking at this incorrectly. The way that I would view this isn't that the jaw has to close. The way I view it is that something occurred in 2022, 2023, where other countries or a debt crisis that is to the United States, where people are not trusting the bond market, and that results in yields going up. That would also result in them finding an alternative to put money. So money is flowing away from the bond market and towards the gold market. We also see that gold has broken out of some patterns along with silver, and platinum is going to be shortly, I think, behind it in a breakout to the upside. So my opinion here isn't the same as his. I don't think the jaw is going to close. I think the jaw is going to get wider. And eventually, it's possible that interest rates run upwards uncontrollably when commodities run upward with it. And money is fleeing the bond market and potentially and maybe eventually have an impact on the stock market as well. And then money will prefer physical metals and commodities. And I think that's my viewpoint. And obviously that's an opinion there. But I think that's what's occurring. And I think that's an explanation of why it's occurring. People are afraid of the bond market, and they're seeking safety, and gold is safety. Historically, the linkage is broken. That's my take on this. Lynn says fiscal is the one who knocks. So it says this is incredible. The U.S. federal debt is set to double in just 8 years, rising from 20 trillion in 2017 to 40 trillion in 2025. And that is the projected U.S. national debt, which is supposedly going to double in about 8 years. Pretty crazy. Dow equals 1. So SILJ, which is the silver junior miners. So junior silver miners have traded within this channel since inception more than a decade ago. The current bull flag is setting up to enable price to break out of the channel. That happens, SILJ can go triple digit. So basically, what we're seeing here is a basing pattern, perhaps, where it's created this channel. The breakout of that we've occurred here recently, you take the lead-in move of the pennant formation, and you could arguably say it might only be the opening of the pennant, but you could also bring this down here and say that the pennant bottoms here. Debatable. The move that he took here was the flagpole, if this is the pennant, and he put the flagpole from bottom to project upward, and that puts us above the channel. You guys probably heard me talk about this in some of the interviews. I said on a short-term basis, we're bullish. On a medium-term basis, which is this projection of this, we are bullish, which then puts us in the long-term channel pattern, which would, if breaking this, would be bullish as well. So we're in a very good situation of how these are all aligned on a time frame basis for SILJ. Looks very, very strong. SILJ breaking out is a big deal, and we also can see that silver, the physical metal futures pricing, also has broken to the upside. So here's Tim talking about the silver futures pricing. He says silver needs to clear $28 now. Once that is through, miners will rip your effing face off. I don't want my face to be ripped off. Come on, Tim. Well, anyway, it's broken out. You can see the downtrend channel here, and you can see a clear break here. Yeah, we got some resistance going across here in the orange that he's got going across. Yes, it's going to take some effort to get through that. And once that resistance is conquered, it'll probably rip. And yes, the miners will probably do a big rip your face off rally. Yes, that's probably all true. Coming down, it says here is Bitcoin and Ethereum priced in real money, which is gold. And we can see that we're basically peaking against gold here and potentially rolling over. We had a November 2021 peak. So is Ethereum going to outperform gold and Bitcoin going to outperform gold? I don't know. But this is what the chart looks like from JC Parrots and what his opinions are on it. Cross-border capital. Why are commodities breaking higher? Why are bond yields trending up? Looks like a very normal cycle. So the world business cycle and shipping activity. The black is the shipping activity. We can see that rolling to the upside. And we can see world business climate is trying to bottom here and looks like it's trying to turn higher. Sometimes we can see in history that the shipping activity moves first before the world business climate moves second. So shipping activity is giving us that information that the economy, world business cycle is going up. We can also see that in the price of copper and the price of gold and all the other stuff working higher as well, which is generally sensitive to new money coming in the system. The big three, except SPR, excluding SPR. So here we are. We're pretty low in commercial inventories in comparison to previous years. We had a stellar year here in 2020, going way up here. But that's all been worked off, and we're at a very low level for the big three, which is crude oil, gasoline, and distillates, which is diesel. Home prices back to rocketing higher. We got the median U.S. home sale price climbing 6.6% year over year, the biggest uptick since September of 2022. We're at $413,000 roughly. Please note that home price data is not seasonally adjusted, which is why we focus on year-over-year changes for this metric. Pretty strong price data in the median U.S. home price. This isn't the new home sales, just the median U.S. home price. Global commercial flight activity is up 12% year over year. Bullish oil, bearish peak demand narrative. Big move in global commercial flight activity. Silver hitting limit up in Shanghai. What's going on there? Once the bird has left the cage, the only question remaining is if we do a 300% return with our small caps or a 1,000% return. Might be closer to the latter given how manias have been trading the last decade. So SFE silver hit the limit up. The market believes that after breaking through the 4-year consolidation platform, it has opened the door to an all-time high. Note that Google translates Shanghai Silver as Shanghai Bank. In CN, silver means money. And there's the big rip. Look at that thing go, boys. Oh, man. If you're in silver, you got to be loving it. You got to be loving it. Here's global oil inventories are falling again. What the? Look at that. Deficits are running in the world and inventories are falling. That's a minus 1 million barrels here in Q2 of 2024. Tim Hack again, it says, when we are at the beginning of a big cycle, the price will just keep going up. Don't sell your silver miners. We now have clear breakouts everywhere. I agree, and we'll probably bust through this channel and work our way up just like Dow equals 1 had above. Does gold still have upside? Implied allocations for gold. ETF market share of gold ETF and versus all ETF assets. And we're very, very low, 1%. Guys, we got a ton of runway ahead of us. Back in 2011, that was up around 8%. And this cycle has to come back and suck in that capital again. So we're looking good. Giovanni says, quote, oil markets to get extremely tight in the second half, Citadel says. Prices could rise to a level that will constrain demand. OPEC regained control of the market, says Sebastian Barak. Coming down, Shanghai Silver versus COMEX Silver. Shanghai, $30.57 versus $27.81. Stuck in the silver from west to east due to the price differential. This is done on purpose to basically suck all the physical to the east and put the west in a squeeze. And I don't know if they can stop this, guys. You can't stop this with physical paper. So what they're going to do is they're going to have to let the price rise to keep the physical in their vaults and try to control it to the best of their, abilities. But they're probably going to lose control if they were manipulating silver, which means we got a big upside to go in the silver price. Game of Trade says this is why we expect gold to hit at least $2,700. The cup and handle pattern and the projection of that cup and handle pattern is 2,700. I've seen it as high as 3,000, but that's what they've got there. Peter Schiff. Inflation moving higher is evidence that the current Fed policy isn't restrictive, but too loose. So leaving rates where they are merely ensures that inflation keeps moving further above the Fed's 2% target. Higher rates are needed, but the Fed doesn't have the guts for more hikes. Well, that's Peter's opinion there. To me, it looks like the 2-year wants to move on up. If the 2-year wants to move on up, that generally signals that the Fed might hike rates. They might. Generally, the Federal Reserve hiking or lowering rates follows whatever the 2-year yield does. And the 2-year definitely looks like it's broken out to the upside. Kavi says, and we'll do a little bit of reading here, he says, if I were a policymaker, I would be paying very close attention to the trend unfolding in the chart below. When weighted equally, commodity prices are currently experiencing another major wave of appreciation. While it is often underestimated, the structural issues driving resource prices upward are far from being resolved. With capital spending for commodity businesses remaining historically restrained, the emergence of new resource projects become non-existent. To recall, CapEx growth works with a lag. In some industries like metals and mining, it may take 10 to 15 years for investments to translate into increased supply, consequently pushing prices downwards. The current scenario is setting the stage for what is likely to become one of the longest commodity bull markets in history. I like those words. Commodity prices, here's the first wave, boom, coming on back. And here is the second wave that we have started with this nice little breakout. Draw a trend line through there, starting the second wave. So I think it looks absolutely fantastic. Way to go, Tavi. I like the information. Energy headlines. U.S. oil production is down to 12.32 million barrels per day over the past week from 12.7 million barrels per day to the prior weeks per JP Morgan. And it's basically the oil pipeline getting filled with nat gas. That's what it is. So the decrease in production was attributed to lower output in the Permian and North Dakota. Rick Rule says if there's a Fed pivot, if we see lower interest rates, I think that the action that you saw in the metals will be muted compared to what's to come. And that is with the yield curve uninverting. And that is when metals take off. They also like to print money sometime during that lowering of interest rate period because a potential crash could occur. It generally occurs when they're lowering interest rates. So if we get a slowdown in the market, I have a feeling that they're going to print a bunch of money and gold and silver are going to be rocket ships because they've broken the big patterns, guys. Knowing where we're at in the cycle is a big deal. We've got an inverted yield curve, and if those yields come on back, it is jet fuel, guys. It's rocket fuel. Christine says the last STEO showed a U.S. production decline in December, but then forecast an immediate rebound. We now know January dropped another 760,000 barrels per day production, and my prediction is down more in February. This is going to get tight here, boys. It's going to get tight in the oil markets. Get ready for it. Morgan Stanley, they came out with this in the commodity outlook for the third quarter of 2024. I don't put too much weight into these things, but this is what they think. They're most bullish on copper, gold, silver, nickel, and they're neutral on iron ore, platinum, aluminum, manganese ore, palladium, zinc, lead, and lithium. They're bearish on cobalt, alumina, thermal coal, hard coking coal, and they're the most bearish on uranium at this time. So that's what they think for third quarter of 2024. We got Peter Schiff here. He says, gold stock investors still don't get it. It doesn't matter if gold sells off. Gold stocks still need to move considerably higher from here just to get back to the price levels they should have been trading at when gold was several $100s per ounce lower than it is right now. So basically, the gold and silver mining companies are lagging where the price of the metals are today. Cuppy says, everything leads to more deficits and more money printing. It's the feedback loop to hell got gold. And that is your Federal Reserve running these net income deficits. No bueno. This is the silver to gold ratio is hitting the highest levels of all year. So silver is starting to outperform gold potentially, and silver futures are breaking out. We could see silver outperform gold and that ratio compress where silver gets closer to gold. And I agree with that. Here's Grady. He says, this inflation versus deflation index ratio chart has been in a range for 8 years. However, now it is a very probable false breakout in the making, which should send it sky high. Getting prepared for a second inflationary wave is now imperative. So this is the index. We've got an 8-year price range. We have a very probable false breakout, which looks pretty good to rip to the upside. We got a lot of room to run to the upside here, guys. A lot of room. So inflation could get pretty bad, and we could see commodities and precious metals really start to rip here, which we're seeing all these different breakouts occur right in front of our eyes. Copper, silver, gold, etc., etc. Here's another one. And you guys know I like my boy Platy, is what I call it. So just like silver was, platinum is also sitting right below a huge blue breakout line. Generational breakout incoming also for platinum. Get ready for the greatest commodities bull ever. It will be your greatest opportunity, market opportunity in life. So here's platinum. Generational breakout is about to occur. This will be the second bull leg. The first bull leg was from 99, 98, all the way up. And here we are ready to break here as well. And we'll go all the way to the top potentially. So that looks really good with a bullish MACD coming into positive territory very soon. And that's all we've got for today, guys. So give me a thumb up for the content, subscribe to the channel, and yeah, we'll catch you guys later. This is Finding Value.